Yeah, so I do think that the CPI number tomorrow comes in a decent reduction. But again, I don't think it even gets us near the goalpost of where the Fed can ultimately start cutting rates. So I'm in the
Okay.
camp with zero hedge.
Yeah.
I just don't see cuts this year. I think again the risk that you're seeing Jerome Powell face is that essentially if he cuts too fast, he's going to have a whole new can of worms with inflation roaring back. And so he's even
Right.
said that before, right, with Paul Volcker.
Double dip.
Listen, we can't repeat the mistakes of past, so I'm going to be hard. So I actually expect them to really be hesitant on cutting rates, even if the economy starts to spin into a recession.
Bitcoin, BTC, moved sideways at around mid-dollar 27,000 on Tuesday as investors awaited the latest U.S. inflation report on Wednesday. The largest cryptocurrency by market capitalization was recently trading at around $27,560, down 0.2% in the past 24 hours, according to CoinDesk data. On-chain data shows that as of Wednesday morning Asia time, the number of unconfirmed transactions had dipped to just below 400,000 from nearly 500,000 over the weekend. In addition, fees for sending transactions had settled to just over $5 from over $20 at the peak of this crisis. But the question on many people's minds was, what will cause the next big move in prices? Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
I'm more in the pause camp. So I think the Fed has kind of gotten to this point. They realize that these hikes have broken the banking sector in many ways. They don't want to create any more problems. We've seen so many banks go under. So many banks have been close to going under. So I'm in the camp where they're pausing, but they're going to be hard on keeping rates where they are for an extended period of time. And I don't think equity markets have priced that in at all. I think equity markets are much more on the Fed will come in and save the day as soon as things get tough mentality. And I just don't think that's going to happen. So for me, I do see that there's going to be some continued rotation out of the banks in terms of deposits, but I do think at least the fear of losing your money in a savings or checking account is kind of now a distant memory, right? We've seen every bank that has failed so far. The Fed or the FDIC has said, hey, we'll pay out whatever the savings amount is, no matter if it's above 250 or not. So I think that aspect is gone, but I do think that there's so much dead weight on these banks, and I think there's even more to come with commercial real estate issues that are going to pop up later this year. So to me, I'm looking at a banking sector that is going to be what I would call zombie banks, meaning that they're carrying massive amounts of unrealized losses. They don't have to actually mark to market these losses, but they are going to only grow over time. And at some point, that's going to be another pressure cooker on the system.
eToro investment analyst Callie Cox points to inflation as the chief concern of everyone from the Fed to crypto traders. On a recent appearance on CoinDesk TV, Cox argued that Americans want inflation to decrease while maintaining job security. And the Fed is trying to balance these, but it's a process that inevitably involves some pain. Powell really leaned into his megaphone and provided some very flexible language on the future of policy. Cox said on CoinDesk TV, "They keep dropping hints and statements where they basically change the language around if future policy moves are needed. This could be a hint that the Fed is becoming more flexible." Meanwhile, despite Bitcoin's congestion, it remains a defensive asset, as she pointed out that it has surprisingly outperformed the S&P 500 on most CPI and Fed days. In the wake of massive sell-offs, Bitcoin, while still risky, seems to be benefiting from both its traditional role and its emerging role as a value store during lower rates.
So I do think metals. I think gold obviously is a recipient of that in some respects. I think crypto has shown glimpses of being that with Bitcoin, and early on when the banking crisis hit a couple months ago, we saw a big pop in Bitcoin. The one thing I would just point out is that recently, as early as last week, I believe it was, we saw a couple banks down close to 50%. The banking sector was looking in trouble again. There were rumors about even more bankruptcies, and Bitcoin actually fell that day. And so what that told me is that while Bitcoin at some point becomes that store of safety, that hedge, it is still a risk asset, and people have to be careful of that. If the markets do start to dump out, I still think Bitcoin does head lower and potentially much lower. Yeah, so the 30,500 level was just an absolutely impressive technical range on Bitcoin. And the reason why, again, that was such a wall and price had so much trouble getting through it is if you go back to 2021, just before the big run up to 65,000, you can see that low right there.
Yeah.
Then we go right over here, that mid-cycle bull market cycle low was right there and then right over here. So it made sense that Bitcoin again could go up into that level and then was rejected. Now, for me, I'm watching this 27,000 level super closely. Right now, we're just above it at 27,700 or so. If that breaks, that kicks off another round of selling that probably takes us to 24 to 25,000. Now, the one thing I will say, and this is something I continue to be overall still thinking this is a bear market in crypto, that this is a bear market rally. The thinking there is not only technical, meaning we haven't got through this 30,500 level, but it's also a concern based on what we're seeing in Pepe and based on some of these other speculative crypto assets. And again, you've been around a long time, Paul. When you see that type of speculation, that's not the bottom of a market, that's the top of a market. And that to me is a big issue that I hope investors really do recognize.
Former FTX CEO Sam Bankman-Fried has begun his defense. In a court filing published yesterday, Bankman-Fried moved to dismiss the majority of the charges against him. One part of his legal team's move to dismiss the allegations of commodities fraud, extraterritoriality. Bankman-Fried's legal team argues in a filing that the commodities fraud charges would necessitate an extraterritorial application of the Commodities Exchange Act, CEA, which is not permissible as the CEA only applies to domestic conduct. They further argue that prior case law dictates that the focus of the CEA is not on the geographical location of transactions, but on preventing manipulation and ensuring market integrity. Remember, FTX did not serve U.S. customers, and as lawyers point out in the filing, was headquartered first in Hong Kong before moving to the Bahamas. What exactly is the U.S. nexus? We've been down this road before with BitMEX. BitMEX was charged under U.S. anti-money laundering laws despite not serving U.S. customers nor operating bank accounts with U.S. institutions.
I think off of these levels, I'm still on a bearish position. And again, if we were to establish ourselves over that 30,500 level, I think things could change just a little bit in terms of the Bitcoin market maybe being in their bottom phase or having a bottom. But right now, I'm honestly, my biggest fear in the crypto market is twofold. One, it's that you don't have regulation yet, and the government is very, they're purposely delaying regulation to bring out the CBDC first, right? So it's the China playbook. And I know it's kind of crazy we're following China, but China outlawed Bitcoin. Then they brought forth the digital yuan, and now they're letting Bitcoin kind of come back again.
Yeah.
The U.S. government didn't take that's case, but what they're doing is they're not giving any clarity in regulation. They're saying, oh, it's a security, it's not, it's this and that, to the point where Coinbase has had to say, we're going to sue the SEC to figure out what the heck is what's going on here. That is on purpose so that they can launch their CBDC. And what that does is it keeps big money out of crypto right now, right? I mean, you don't have hedge funds, you don't have a lot of these bigger players feeling comfortable to invest in it until the government unveils their CBDC. And then I'm sure it'll coincide with some regulatory stuff. So for me, that's a risk. And also I look at the stock market and I see everywhere signs of complacency. The VIX being where it is, the pattern formation is a replica of the psychology of the market chart, where just before it has a major collapse. And so if the equity markets are going to drop big, 20, 30%, I have a hard time believing Bitcoin is going to hold up in that situation.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.